Hi everybody, this is Ospreyeye from mychartcoach.com, and in this video we're going to look at the S&P 500, SPX, SPY, and Dow Jones Industrial Average. So yeah, huge move today. Congrats everybody on the big bounce, up nearly 5% for the S&P 500. The move above 30 on RSI and above 20 on Fasto today was a buy signal, signaled the chart was heating back up. Needs to stay above those levels. If it dropped back below, that would be a red flag. You notice the giant volume on Friday. The volume was building with the giant climax spike on Friday. You know, that signaled people were loading off this previous low level here, right above 2850. The S&P 500 did close above the 400 and 300-day simple moving averages on Friday. It had created this gap between Thursday and Friday. That gap filled today, and then the bullish move today was the close above the 38.2% Fibonacci retrace level, EMA 4 at 30.62, and the 200-day simple moving average at 30.48. All those are combined here in the same zone. And so what you want to look for tomorrow is it needs to stay above 30.50. If it starts trading below 30.50, that's going to be your red flag, signaling more consolidation, not ready to head higher. In order to bust higher, it's going to have to get above this gap. There's a gap just above that's unfilled. If it can get above the gap, the next level is the 50% retrace level, which is lined up with EMA 8 at 3125. So 3125 is a big level tomorrow. If it can get above that, it could possibly run up here near this 3200 level, which is just above the 61.8% retrace level, which is lined up with the 100-day simple moving average at 3168 and EMA 13 at 3178. So those are the key levels above. It's got some work to do to get through resistance. If it comes up there and stalls out at the 100-day simple moving average, you know, that'll be a red flag. So we'll just have to see if it can stay above support. If it gets back down below EMA 4, if that level fails to hold, that's going to be your big clue that it's not ready for a sustained move higher, and then it could retest the recent lows. Now, if you look at the S&P 5, or if you look at SPY here, this is the S&P 500 ETF. Same thing, you know, your bullish move above RSI and Fasto. Fasto is almost back above 50, so that would be really bullish if you get back above 50. Futures trading is down tonight, but there is the G7 emergency coronavirus meeting, and so there could be some stimulus coming, some economic support coming to try to help boost up the market with the global slowdown. If you look here, there was increasing volume once again with the huge climax on Friday. This hollow red candle shows that even though SPY was down on the day, it closed above the open, so that was bullish. The gap between Thursday and Friday did fill today, so that's good. It held the 400-day simple moving average at 287. That's what it bounced off of, and the 300-day simple moving average at 292. And so what it did today is it got back above that 200-day simple moving average. So 302 is a really big level. It needs to hold that level, and it also needs to hold the pink line. That's EMA 4 at 306. So, you know, 306 is huge. You know, if it gets back below EMA 4, then it's still going to be heading lower. It's going to signal that the bears are still in control. If EMA 4 holds, look for the next upward gap to fill and a move up to EMA 8 at 312.56. That's the big level. And then above that is this 61.8 retrace level. And so, and keep in mind that 312.50 is lined up with the 50 retrace level. And so that's another key level to break. And if you can get above that, like on a really big bounce, if it gets good follow through, you'd be looking for a move up here to around 319, 318. That's the 61.8% retrace level, and that's EMA 13, the orange line. Those are going to be big levels to break. You know, you could get a bounce back up to one of these levels, and then it could stall out and continue the downtrend. In my opinion, we are in a bear market right now here because the S&P 500 is in a downtrend on the daily chart. So it's in a downtrend. This is a bearish downtrend. And so it's got to get back above the middle Bollinger Band up here at 326 and above the 50 SMA at 325 in order to get this uptrend going again. Notice the uptrend over here is above the dotted purple line. As long as candles are forming below, SPY is in a downtrend and it could head lower. And so, there's giant volume supporting this bounce. Usually when you get big volume like that and the big players are back in, they want to take it higher. But we'll just have to see if this is going to be a V-shaped bounce or if it's going to be more of a up and down kind of U-shaped recovery. Okay, if we look at SPY here on the 15-minute chart, you can see here it came up and it filled the jar back to the Thursday high close level. Thursday high close was at 1 o'clock on the 27th. Look, it closed right at that level. The algorithms are like magic. I mean, that move today into the close was really powerful. They had the shake, it formed the double then triple top here at the 100 SMA. It was the algos weren't letting the 100 SMA break, and then it came down, giving you a head fake, thinking, oh, it's going to come down here and test the 50 SMA, but they quickly reversed it and they ran it for 5 straight 15-minute candles into the close with a giant climax spike right at the very end. So the bears were really getting squeezed. It started off slowly. They shook everybody out and then they ran it, and so it formed a W-shaped bottom here, and then now the jar is filled. So now you have a jar fill back to 309. So to head higher, you really want to see SPY above 309. If it drops below 309, the risk is it's going to come back down and test this 100 SMA at 302. Okay, let's look at the Dow Jones Industrial Average. Once again, back above 30 on our side. That was a buy signal, break it above. Has to stay above 30. If it drops back down below 30, that's going to signal more consolidation. Above 20, another bullish move. What you want to see is a move above 50. If it gets back above 50, that's going to be a really bullish signal. Okay, now look at the Fibonacci retrace level, from the all-time high up here down to the bottom of the drop. The bounce correlates with the June low. See where the June low was, low closed down here? Closed 2 days down here from May, June of 2019. Hit that level exactly and bounced right off. The gap between Thursday and Friday filled, and then today there was a bullish close above EMA4, the pink line, and the 400 and 300 day simple moving averages, the blue and the black line. Also closed above the 38.2 Fibonacci retrace level. Now that it's above that 300 SMA, it needs to stay above. If you see S&P, if you see the Dow Jones Industrial Average drop below 26.0, just 26,600, 26,607, the 300 SMA, that's going to be a red flag. I mean, that's going to signal it's not quite ready to go. Now what it needs to do is break above that, fill this gap here between Wednesday and Thursday, and then head up to the 50% retrace level, which is lined up with the 200-day simple moving average here at 4724. So this is going to be your big zone right here. Big zone to break. If it can get above both those levels, it could possibly run up to the EMA 13 and the 61.8 retrace level around 27,750. Now notice that the back here there was this channel for July and September. There was this previous high here that it failed to break back here earlier in 2019, and then once it finally did in November, that signaled the big breakout higher. So now this is going to be a really tough resistance zone, and that's lining up in the same zone as that 200-day simple moving average. So if you see it come up, hit that 200-day simple moving average, that 50% retrace zone around 27,241, and it stalls out. It could come back down and retest some of these lower levels before it finally makes the push higher and runs to new all-time highs. There could be some more consolidation. Once again, look at the giant volume. That huge volume signals that a lot of people were loading because it bounced off of low of day and it closed above the open. This was a really bullish candle on Friday, so congrats to everybody. I know that futures action on Sunday with the big 500-point down really killed a lot of the premium on the call options. So I know a lot of people got burned that were holding calls over the weekend. But yeah, options trading can be tricky when you're naked. So just keep in mind it needs to hold support and break resistance to head higher. Expect a lot more volatility. This was like more than, look at how quickly it dropped, and then look how quickly it recovered. I mean, this is like more of a V shape than a normal V shape. That was an extreme bounce back, and so that could be an unsustainable move. We'll have to see what happens. A lot of volatility this week with the Super Tuesday, and then we've got the Fed, and yeah, just a lot of stuff going on. Obviously, the coronavirus with all the test kits going out across the U.S. Once the results come in, that could throw a little bit of cold water on the fire here for this hot run that we got today. So let's see if we got a multi-day run and resistance can break, or if there's going to be some more consolidation before a real recovery. Thank you for watching this video. Please check us out at the mychartcoach.com chat room. Thank you.